Dear shareholders, ladies and gentlemen, I am pleased to welcome you to Solvac's webinar. Thank you for attending and thank you for your interest in Solvac. My name is Jean-Marie Solvay. I am the chairman of the board of Solvac since May 2021. Previously, I have been a member of the board of Solvay for 29 years. I am an entrepreneur who has founded several companies in the United States, in Switzerland, Germany, and Belgium. I am here with Michel Defourny, General Manager of Solvac since 2021.
Good evening. My name is Michel Defourny. Before joining Solvac in 2021, I have spent over 30 years at Solvay, where I held several positions in finance, communication, investor relations, corporate secretary, and shareholder affairs.
Thank you, Michel. We are here with you to describe the evolution of Solvac over time, with its track record of value creation as Solvay's historical reference shareholder. We will outline with you the transformation of Solvay into two separate companies, how it makes sense, and why it is a value creative for Solvac. And finally, why this is an opportunity for Solvac to evolve in order to best support these two companies, Solvay and Syensqo, in each of their ambitious new equity stories. Michel, please give us a snapshot. What is Solvac all about?
The journey of Solvac started 40 years ago. Solvac is the reference shareholder of Solvay, holding 30.81% of the shares. The last reported net asset value per share is €137. This is the underlying value of each Solvac share based on the price and the number of shares of Solvay that Solvac owns. There is a lot of value behind each of the Solvac shares. More than 3/4 of its capital is in the hands of descendants of the founding families of Solvay, about 2,500 persons in total. On the other hand, about 1/4 of Solvac is held by other private individuals and retail investors who are interested in the story of Solvay and enjoy a higher dividend yield through a shareholding in Solvac. In total, 14,000 people are shareholders of Solvac, and we know all of them, as all shares are nominative shares. We will come back on our performance and shareholder returns later in this presentation.
Thank you, Michel. Since its foundation, the strategic evolution of Solvay has been driven by the objective to create value for its shareholders. The soda ash business was the sole activity when it all started 160 years ago. Later, in the 50s, the group diversified into plastics and later into pharma to reduce the cyclicality of a group. When it appeared that this diversification was not sufficient to create enough value for the shareholders, the portfolio was refocused, stepping out, among other things, from pharma, polyolefin, and PVC. Solvay aimed to be within the top 3 global leaders in each of its remaining activities. Today, the intended demerger of Solvay is a continuation of this transformation. The premise of a demerger is that pure players are more competitive than conglomerates. The split should provide each of the two activities, essential chemicals and special chemicals, with the appropriate structure and business model to be leaders in their markets. All along this evolution, the role of Solvac, that you can see here, starting from there, going through, has been essential in supporting Solvay as a major shareholder with a long-term vision. Since its foundation to date, Solvac has been an essential strategic and financial partner to Solvay. While working on this transformation journey with Solvay, Solvac has also gradually increased its shareholdership in Solvay throughout the years, growing from 17% to 13.8%. Solvac has supported Solvay's long-term value creation strategy and governance, allowing it to redeploy its portfolio over the years and positioning itself with complementary businesses that are now being separated. This strategy has enabled Solvay to ride through the ups and downs cycles of the chemical industry. While doing so, the partnership between Solvay and Solvac has been fruitful over the years, as we both agreed on the importance of ambition on the one hand, balanced with a healthy capital structure and a policy of rewarding shareholders on the other hand. At the same time, Solvac has been attentive to the core values of its founders. These are growth, healthy capital structures, ESG, respect for people, and communities. These values have underpinned Solvay since the beginning, and they bind the company to its shareholders. I now give the floor back to Michel. Please, Michel.
Thank you, Jean-Marie. Let's now look at the financial track record of Solvac. Two numbers are of particular relevance for shareholders. The annualized total shareholder return is 8.2% over the last 20 years, a clear outperformance versus relevant benchmarks such as the Benelux Monoholding and BEL 20. Over the same period, Solvac's total shareholder return has actually also overperformed the likes of the CAC 40 and most of the Europe's diversified indices. People who have invested in Solvac and reinvested their dividends have made a good investment. Our dividend has also grown by more than 5% on average, year after year, for more than 40 years. This is more than 1 billion euro of distributed dividends at Solvac level over the last 10 years, while progressively increasing the net asset value of the company. Next to the historical performance of Solvac, we believe that we provide an optimized investment solution for shareholders, thanks to strong underlying value with a net asset value of 137.1 euro per share, or healthy balance sheet showing a strong 92% equity ratio, and the optimized cost structure, which is one of the lightest cost structures amongst Benelux holdings. It is all about optimization and value creation for shareholders. By the way, all these elements are reflected in the average broker's target price of about 150 euro, testifying of ample upside potential for the Solvac share price. Solvac has offered strong return, as we saw before, while also presenting a comparatively more stable investment. This is showcased by a historically significantly lower volatility compared to the relevant benchmarks such as BEL 20 companies or other Benelux monoholdings. For example, let's look at the volatility. 2.1%. This figure compares to a 23.4% on average for BEL 20 companies over the same period. As a result, and from that point of view, the risk-return profile of Solvac has compared favorably to relevant benchmarks, and it is consistent throughout the different periods. For over 40 years, Solvac consistently rewarded its shareholders with progressively increasing dividends, increasing by 5% year after year on average, as I said earlier. When it comes to the future, dividend policy will of course be closely tied with dividend policies of Solvay and Syensqo going forward. Giving the floor back to you, Jean-Marie.
Merci, Michel. Solvac is committed to extra financial goals and ethical values that have been at the foundation of Ernest Solvay's entrepreneurial and philanthropic drive. That means that we are totally convinced that the chemical industry is the industry that can provide solutions for the ecological transition. Chemistry is in everything that we see around us, in telephones, in glasses, textile, TVs. Chemistry is everywhere. Without chemistry, you wouldn't have the world that we live in right now. In the same way, in the future, without chemistry, we will not be able to create the technologies that will allow us to live well without spoiling our environment. A lot of work is needed to bring solutions to the world impacted by population growth, pollution, and climate change. We believe that there will be no sustainable future without chemistry. We also believe that science and education have been and still are probably the most important way to bring a better life to humanity. Science is international. It exists with critical thinking, which is a bridge between nations and a way for human society to reinvent itself. Equally important is the respect for diversity, people, and communities. These important values have been reinforced in the culture of Solvay by Ilham Kadri, the current Solvay CEO, with transversal company programs such as Solvay One Planet and Solvay One Dignity, down here, which brings respect. Solvac is totally supportive with these initiatives put in place during the 4 last years at Solvay, and which will continue to be actively promoting in these values in the future. Let us now look at the board of Solvac. It is a diverse board with expertise in different fields, composed of 13 members, 7 men, 6 women, with large and complementary backgrounds and experience. The governance is supported by an audit committee and a nomination committee. Every 3 years, an evaluation of the functioning of the board takes place, in which every board member is evaluated by all the other members and by the chairman. This evaluation process is structured with the support of an external HR professional. I am very proud to see how attentive the board is about continuously raising its performance in service of enhancing value for its shareholders. The whole board is very committed to that mission. Michel, back to you.
Thank you, Jean-Marie. This brings us to why we believe at Solvac that the split of Solvay into 2 separate companies is the right solution. Why do we support the partial demerger of Solvay into new Solvay and Syensqo? Solvac has been in contact with the management team of Solvay at every relevant stage of the separation process. Solvac has hired an independent review team composed of financial consultants and lawyers to challenge the industrial projects of Solvay and Syensqo presented nearly 2 years ago. We have thoroughly studied the information made available with our team and are now convinced that this project will create more value after the split than the current situation. Why more value? First, the two independent companies will start both with strong balance sheets and debt ratings. These will enable them to better set their strategies and the business models. Furthermore, these will also enable them to have a better allocation of capital to fit their investment and better serve their customers. At the same time, as the companies will be independent, each one should be more driven to succeed. Investors interested in clear models will better be able to choose one or another business model. Commodity business focused on cash flows or specialty business focused on growth and added value to end market customers. For Solvac, owning two businesses susceptible to different business cycles is a valuable risk mitigation. Seen from Solvac point of view, next to the potential value creation, presented here, the Solvay split, as well as the differentiated strategies of the two entities, will enable Solvac to diversify its risks by holding not one, but two independently listed entities with their own operations and with activity cycles that are decorrelated from each other. We see this as a key milestone and a great benefit which will even further improve Solvac's risk-return profile going forward. Giving the floor back to you, Jean-Marie.
Merci, Michel. In the past, the founding family interest was exercised at the board level at Solvay through direct representatives. Now, these appointments will be done by Solvac, independently, taking all stakeholders into account. On the board of new Solvay, there will be, in the future, 3 Solvac-appointed representatives on the board of 10 appointed directors. These 3 directors will represent Solvac. Out of these 3 directors, it is provided that one will be nominated as vice chair of the board. The same will be true for ECO. You can see this here with Solvay, same format with Syensqo. The Solvac representatives have been selected through a rigorous nomination process. They will, like any other director, act in the corporate benefit of Solvay and Syensqo, also taking into account the interest of Solvac. In each board, there will be a Solvac representative in each of their 5 committees. As will be proposed at the extraordinary general meeting, out of 6 Solvac board representatives at Solvay and Syensqo, 4 of them are already known, Solvay and Solvac from the inside. Aude Thibault-Mézières is proposed to the board of Solvay, where she will be vice chair. Mel de Vogue is already a member of the board of Solvac and is the chair of its audit committee. Thierry Bonnefou is a new appointee. He will be proposed at the board of Solvay. He has been administrator of the Fournes Solvay since 2010. He has over 21 years of experience in the transportation industry. He is currently Digital Train Program Director at Alstom, the company he joined in 2008. Françoise de Viron is proposed to the board of Syensqo, where she will equally be vice chair. Edouard Janssen is also proposed at the Syensqo board. Finally, Dr. Mary Meany will be proposed to the Syensqo board. Mary is currently a member of the board of directors and of the audit committee of the group Bruxelles-Lambert SA. Dr. Mini will bring expertise in strategy, M&A, and change management, which she acquired over a 24-year career at McKinsey. There, she was a senior partner. She served McKinsey Shareholder Council and led McKinsey Global Organization practice. We are confident that with this transparent and effective governance, the voice of a reference shareholder will be providing crucial contributions at the board level of each Solvay and Syensqo, with the aim to support the new defined strategies of both companies. This holding company model brings together two different shareholder profiles. This is important. Solvac's historical purpose has been to support Solvay. We see our future as a continuation of our past. Solvay has separated into two champions to create significant value and growth. We therefore see ourselves as ideally suited to continue as a reference shareholder supporting both industrial assets with their respective new strategies. On the one hand, Solvay is there to enhance value through cost leadership, maximize cash generation, and reinforce market leadership while managing the cost of carbon neutrality towards 2050. The commodity business model is a stable GDP growing market, projects a policy of stable or rising dividend. The 2024 distribution objective of a new Solvay will be 60% of Solvay's dividend level before separation. On the other hand, Syensqo, in the sustainability specialty market, is a growth model with the ambition to achieve above market growth, strong returns, innovations, and commercial capabilities. The company will focus on sustainable growth. The dividend policy will be a balance between growth that creates sustainable value for shareholders and the structural capacity to pay down debt. The 2024 distribution objective of Syensqo will be 40% of Solvay's dividend level before separation. We believe that Solvac presents an attractive profile for shareholders who are searching for a combination of cash-generative industrial assets and growth-oriented assets. As a conclusion, I would like to share with you our ambition at Solvac. Solvac is positioning itself as a long-term partner for investors interested in the future growth of the sustainable chemical industry. This is a story of long-term vision of sustainable value creation with a balanced risk profile and high governance standard. Solvac, as a reference shareholder, intends to provide the support and ambition needed for Solvay and Syensqo's growth strategy as industry leaders in sustainable chemistry. Value creation is embedded into Solvac's mission. Our board will tirelessly seek to reinforce value creation for its shareholders. We are happy to count on shareholders like all of you, and we want to bring you on an exciting journey towards Solvac 2.0. I propose that we take a moment to look at what both Solvay and Syensqo aim for after the separation. Afterwards, this webinar will continue with a Q&A session. Thank you very much.
Life is made of elements coming together. we are mastering the elements. Over the past 160 years, our obsession to reach excellence has been driving us to achieve mastery of our processes. Invisible and yet so vital, our products are at the heart of everyone's life. The essential solutions of continuous progress for our planet and its people. Generation after generation, we are Solvay, mastering the elements essential to our world.
I am Philippe Keren, and I'm thrilled to be speaking with all of you today as the future CEO of Solvay. Working in Solvay has always given me an immense sense of responsibility and pride, and I'm truly honored to soon be leading the company where I began my career 30 years ago. I also want to thank the board of directors and Ilham Kadri for their support and confidence. I have a passion for industry. This is why I started as an engineer. I strongly believe in sustainable development. This is why I developed two of the biggest greenhouse gas emission reduction projects in the world in the early 2000s. And my ambition is to contribute to the transformation of the industry. This is why I decided to move to business. Now, today, we begin our next chapter of this great history, a 160-year history that started with the invention of the soda ash synthetic process by our founder, Ernest Solvay. Now we are gathering all the essential chemical businesses to create the new Solvay. We will embrace our past and we will carry forward our legacy of progress. At Solvay, we are mastering the elements essential to our world. We master our technologies. We believe in science. This is in our DNA. And this is how we have maintained year after year our leadership positions. This is thanks to our unwavering commitment to operational excellence and to process innovation. More importantly, the elements we produce are essential to our world. They are at the heart of people's everyday life. Our products are essential. They are everywhere. You can find them in glass windows, electric vehicle, solar panels, hemodialysis treatment, microchips, green tires, and a lot of other fantastic applications. It's very exciting to perpetuate this legacy of leadership thanks to our excellence in process and technology. At the heart of our journey is our determination to achieve carbon neutrality. Through relentless process innovation and a commitment to sustainable practices, we are not just adapting to a changing world, we are seeking to lead it, crafting a path to a sustainable future that others in our industry may follow. So this is our manifesto, our ambition, our promise to you, shareholders and investors. As we embark on this new chapter, we do this with the certainty that our best years are yet to come. Now, let me just say a few words about who we are. This is the new Solvay. As you can see, we will be a major player in the essential chemical arena. We operate 5 major business lines, all with leadership positions in the markets. we have critical mass. And we're very proud of our top quartile EBITDA margins at 23% and cash conversion at 70%. We have a well-balanced geographical footprint of both global and regional manufacturing plants. These regional locations are close to our customers, which is a key competitive advantage. And looking at sales, you see the same well-balanced geographical presence. Our products serve essential needs across a wide and diverse range of end markets, ranging from auto to consumer goods, from electronics to building. And this broad range of sectors support the resilience of our company, with no exposure above 21%. This is unlike our peers, who tend to be more concentrated in one or few markets. Our applications are equally diverse. You can find Solvay's solutions everywhere. The use of our products is driven by key megatrends, such as the need for more energy-efficient solutions, which drives more use of silica in our cars, and more soda ash for triple glazed glass windows in our homes and offices. And I bet you didn't know that hydrogen peroxide is not only used as a disinfectant, but it's also used to produce microchips. And this is driven by the digitalization trend. So now that you know where we come from, what we stand for, and what our vision and our ambition are, let's talk about strategy. Our strategy is founded around 4 core priorities. First, market leadership. Being the market leader allows us to be the owner of our destiny. Cost and process leadership support a sustainable competitive advantage. Energy transition is critical to our carbon neutrality goal by 2050, and we have already made very significant progress. Not only do I care deeply about this topic, but it is critical to our competitiveness, to our customers, and to our employees. We embark on our journey with a sound balance sheet. We will maintain our capital discipline, making prudent and rational use of cash. Sustainability is profitability. It secures our position as a leading supplier for our customers, and it preserves our competitive advantage for the long run. Solvay One Planet is our North Star. We will continue to drive progress, including the fact that we confirm our carbon neutrality target by 2050, and we are committing to a living wage for all our workforce. And we must deal with the environmental footprint of our production process, especially in soda ash. The good news is that we remain committed to improve this. Like we told you before, our climate ambition is to become carbon neutral by 2050. This is imperative. We've made progress already, and we'll continue to develop solutions to do more. Last but not least, capital discipline is key, and it's a muscle that we have developed over the past years. The separation will allow us to have a simpler and more focused cash allocation strategy. Our business is highly cash generative, and what is key in these circumstances is how we allocate capital. Essential CapEx only consumes 1/3 of our cash. Dividends are sacrosanct, of course, and we will allocate the remaining 1/3 with discipline and with returns at the forefront of our thinking. Discretionary CapEx decisions will be made on the basis of merit and affordability in the domains of capacity growth, process efficiency, and energy transition. And in everything we do, we will always secure both dividends and our investment grade. Now, our 2028 targets are the results of everything that I've explained. The separation will allow us to generate 300 million euros of savings from the new operating model. This will allow us to further anchor our leadership in our markets and create more value for our stakeholders. In formulating our objectives, I took into account the strength of our portfolio and the growth that we can deliver. I assessed with the team all the opportunities that I expect our new operating model to generate from simplification and standardization. We are starting from a strong position, but we want more. That's why we are raising the bar on all the key metrics that I'm convinced will maximize value. In simple terms, I want us to go from being top quartile to becoming the benchmark. Our ambition and our plan to sustain and to extend our leadership in our markets and in our technologies, I trust this is clear as well. The last few years have been amazing, and the separation will allow us to go further and faster. It will allow us to adapt the way we work, to further enhance our cost-effective operating model, and to be even more cash-focused. This is the journey that we offer. This is what we are committed to. This is the journey that I invite you, our investors, to join. Thank you very much.
The future is rich with unexplored possibilities. We are explorers, people from many horizons who dream the impossible, solve the unsolvable, partnering to pioneer the future of science. Because a sustainable future starts with our commitment. Our solutions and innovations are the catalysts that open new frontiers for the planet and its people. We are Syensqo, explorers creating breakthroughs that advance humanity.
Thank you for all of you for joining us today. It's a big day. As we embark on an exciting journey into the future, it's an honor and privilege to stand before you as the CEO or incoming CEO of Syensqo. Syensqo was in fact born out of a vision of innovation and growth, and our dedication to making a meaningful impact in our industry. We believe Syensqo has an important role to play, and we will create breakthroughs that advance humanity. Now let's take a look at our new company. This is Syensqo. We have over 13,000 people across our 62 sites with 12 major research centers spread around the world. And as I mentioned, we have best-in-class margins, which showcase our high quality, high value-added technologies. And these specialty businesses are now, by the way, delivering as much cash. That's a good news. That's our sister company. So ladies and gentlemen, we have entered into a new era. And look at us. We are already one of the world's largest specialty companies in the world. Now, of course, we are global. But at the same time, we're very close to our customers. You may also take note that the separation has shifted the company to be more US-centric. This is beautiful, isn't it? The US gets a lot of things right these days. We shall have the highest percentage of net sales in North America, followed by Asia. We like it too, as we can further penetrate the Asian markets, and this is quite different picture to our current company today. In fact, these are more than just growth opportunities. They are disruptive trends. Some of you call it megatrends that will shape our society, that will shape our planet for decades to come. What is even more exciting is that there is a clear acceleration to invest in these technologies. The market is real. Technologies that support the energy transition, that support clean mobility, that preserve our natural resources and improve the quality of life. So now, before we look too far ahead into the future, it is worth highlighting that leadership positions we have already achieved here as a leader in the top three leading positions across 90% of our markets. We have developed these positions across our portfolio, across a number of growth markets, and we have created actually trusted partnerships and relationships with our industry leaders, our customers, and some large and winning brands. Now I'd like to share our strategic direction with you. It's simply built on 4 pillars. We are a growth company. We have a growth engine, and we will extend our existing leadership positions by bringing technologies to the market that leverage the megatrends and solve our customers' needs and unmet needs. Innovation. Innovation leadership is at the heart of our new strategy. And we all recognize that the world is changing at an unprecedented pace. And to thrive in this dynamic environment, we must propel our innovation to new heights and continuously raise the bar. We will do this by investing in sustainable solutions in the midterm and beyond, by the way, making circularity part of the design of our molecules, because our customers, our employees, our kids, you, our shareholders, want a cleaner and greener solutions in your daily lives. This is how we will create value to drive growth, always backed by a religious capital discipline. You've seen it from us in the past 5 years. This is going to continue. Prioritizing, obviously, our strong cash delivery to fuel the growth and reward shareholders. Syensqo is today in the great position of being a leading provider of technologies in electrification, in defense, in civil aviation, in aerospace, and in a diverse range of consumer technologies. Going forward, we will drive even more growth by expanding our presence and influencing our markets, both organically and through the strategic partnerships we have created. So maybe you are asking yourself by now, how do we plan to extend our leadership position? In fact, we now have about 25% of Syensqo's workforce as a customer-facing team, unmatched, at least in my own professional career over the past 25 years. Why is that important? We want to be the first person our customers call, not when they send us the bill or the invoice, when they have a problem, when they think about a new opportunity. So as you can see here, we have already committed since I joined the company back in 2019 to a number of major capacity investments that will drive a significant part of the growth. All these projects together are expected to generate at least 500 million euros of EBITDA at maturity. And as a growth company, and as you can expect from us, we have even more projects in the pipeline for the period beyond our midterm plan horizon. Let us now move to how we expect to propel our innovation leadership to new heights. Did you know that about 50% of our sales today are either IP or long-term contract protected across both materials and consumer segments? And they are gaining traction with the vitality index of 20%. What is vitality index? It sales from product less than 5 years old, okay? And I can tell you, again, in my 25 years of industry experience, this is truly best in class. Did you know that 15% of our people are working in research and innovation? 15%. Do you understand now why we are called Syensqo? So as I mentioned at the start, we want to be the benchmark for innovation. We will stay ahead. We will create breakthroughs in technologies, solid batteries, for example, bio-based personal care solutions. Look at this. We measure our pipeline. This is not a wishful thinking, a concept paper. We have about 3.5 billion euros worth of non-risk adjusted sales in our pipeline. And to support our growth, we are increasing our annual research spend up to 5% of sales in the future, from the 3.8% we had in 2022, a level which was already significantly higher than the average of our peers, as you can see in the slide. Our customers expect this from us, as they rely on us for their own future. This is what leaders do. Sustainability is not just an ethical obligation. It is also a strategic advantage, as it aligns with the evolving values of our customers and our partners. Most of you probably are familiar with our One Planet commitments. But here, what you can see is that we have adapted it to the Syensqo growth strategy, with more demanding targets, by the way, aligned with 1.5-degree trajectory. And we will seek SBTi scope 1, 2, and 3 for the new company, just like we did before. Look at our commitments on the slide. We remain dedicated to reducing our environmental footprint. We will become carbon neutral in 2040, so faster than the current company, because we can do it, and we can afford it. Our top-line growth will be increasingly driven by circularity, as I told you before. We are reinventing a circular chemistry. I wish I'm younger, in the lab, where we prepare each product for a second usage, for the third usage, for the X usage. We are committed to a higher amount of circular sales. Actually, 50% commitment higher than our current company's target today. Of course, I cannot finish the One Planet section without speaking about our commitment to people and their safety. Safety will always remain a top priority. One accident is one too many. And of course, we continue to close our gaps in diversity, equity, and inclusion towards gender parity. And like our sister company this morning, we are fully rolling out our living wage promise globally by 2026. And like we did before, we will provide updates on Syensqo's One Planet progress on an annual basis. These bring me now, nicely, to our midterm financial targets, which are aligned with our growth focus strategy. Our priorities will be on growing our top-line sales, always above markets and our peers, strengthening our margins, and continuing to improve our returns. And of course, we remain committed to a strong investment grade rating. So to wrap up, ladies and gentlemen, this new strategic direction is not just a blueprint for our future. This is a declaration of our commitment to accelerate growth. We are structurally positioned to outperform our growing markets, and we will extend our leadership and best-in-class profitability through the investments we are already making, and through our increased focus the separation will bring us. Innovation. It sits at the heart of who we are. This is where we are good at. We are athletes in innovation. Not only we are the innovation leader, but we have the ambition to establish ourselves as the innovation benchmark, driving even more differentiation to our offering. And as always, you have seen it from us again and again, we will stay disciplined. We will continue to have a disciplined approach to how we allocate capital, always designed to deepen and accelerate the value creation for our stakeholders. Ladies and gentlemen, we are now coming to the end of today's inaugural events for Syensqo. So please remember now, what is Syensqo? Quite simple. We are growth. This is us. And this is only the beginning. Thank you very much.
Dear shareholders, many thanks for attending this webinar so far. We have already had a very interesting presentation given by the chairman and general manager of Solvac, as well as a small sneak peek into the news stories of Solvay and Syensqo. During this final part of the webinar, we will enter into dialogue with Jean-Marie Solvay and Michel Defourny. In fact, we have asked them to answer the many questions that you have sent us in advance, for which we would like to thank you. Jean-Marie and Michel, if you agree, I would propose to go ahead and start with the first question.
Please.
What will happen with the Solvay share at the moment of the split?
Thank you. At the moment of a demerger implementation, the Solvay shares will be split into 2 shares. This way, Solvac, as a shareholder of Solvay, will receive on 11th of December 2023 1 additional Syensqo share for each Solvay share it currently holds.
Okay, and what will then happen with the Solvac share?
Thank you. Maybe you can take that answer.
Yes, of course. The Solvac share itself will not change. For each Solvac share you currently own, you will just keep that 1 share. Nothing changes there. Solvac will, however, own 30.8% in both Syensqo and Solvay after the demerger, so it will hold 2 participations instead of 1.
Thank you, Michel. Then we received a question regarding Solvac's ownership. The question is, how would Solvac balance its ownership power between the 2 new entities? Will their interests align more with one entity than the other?
Okay, yes, I'll take that one. It is the intention of a proposed demerger that shares of a new Syensqo company will be issued directly to shareholders in the same proportion as their interest in Solvay immediately prior to the demerger. The current Solvay will keep its listing and name, Solvay. As such, there will be no impact to Solvac's relative balance of ownership in the respective new equity entities. We are, at Solvac, equally excited about the prospect of each entity and look forward to remaining a reference shareholder in both.
Thank you, Jean-Marie. Another question we received is how Solvac prepared itself for the separation project of Solvay.
Michel, you want to take that one?
Yes, of course. We have planned for the transaction on several fronts. As the reference shareholder of Solvay, we have continued our fluid and direct dialogue with the company's management and major stakeholders across the different stages of the separation process. Together with external advisors, we have performed an extensive strategic and independent review that resulted in our support for endorsing the split. We felt it was important that Solvac communicates on its position in the demerger, and therefore we also made public on November 14th our intention to vote in favor of all resolutions submitted to the shareholders' meetings on December 8th.
Thank you, Michel. Another important question we received is how do you plan to endorse a sustainability strategy for Solvay and Syensqo, which are both active in the chemical industry?
Thank you. I'll take that one. Solvac will continue to play its role as a reference shareholder, now reinforced with board representation in each of both Solvay and Syensqo's board. We will ensure that the social and ethical values that have been embedded in Solvay throughout the ages, complemented by the environmental principles that have been a key focus in the most recent years, will remain strongly embedded in the overall strategy of Solvay and Syensqo. Solvay's founding families have accompanied Solvay's transition for 160 years and will continue to do so. Solvac strongly believes in the role of essential chemistry to meet the needs of humanity and the role of innovative specialties to build a sustainable future. We are truly convinced that chemistry is crucial to the energy transition, electrification, thermal insulation, new materials, etc. There can be no decarbonized modern world without chemistry. Solvay and Syensqo will therefore play an important role in the transition to a more sustainable world encouraged by their reference shareholder.
Understood, Jean-Marie. Another question we received a few times is whether Solvac's current dividend level and policy is at risk.
Michel, you want to take that question?
Pleasure. In combination with growth ambitions for its underlying assets, Solvac will continue striving to reward its shareholders by passing through, almost entirely, the dividends it receives from Solvay and Syensqo in accordance with the respective dividend policies. Both the new Solvay and Syensqo have the ambition to create sustainable value for shareholders through a combination of dividends and focused growth. On the one hand, the strategy of the new Solvay will be to enhance cost competitiveness, maximize cash generation, and reinforce leadership. This strategy should generate the free cash flow for the dividend. On the other hand, the strategy of Syensqo will be to achieve above-market growth and strong returns through investment in capacity, innovation, and commercial capabilities, which should reward shareholders with above-market growth and increasing financial capacity. It will be all about keeping optionality to create as much value as possible for shareholders, either through dividends or targeted investments. In that sense, Solvac creates options in terms of capital allocation and aims to please two types of shareholders: the ones looking for dividends and those who want to benefit from the growth opportunities in the specialty chemicals industry. For the dividend payout in 2024, 60% of Solvay's dividend level before separation will be distributed by the new Solvay, and 40% will be distributed by Syensqo.
Thank you, Michel. We've also received a question regarding the asymmetry between a Solvac share and a Solvay share. The question goes as follows. What do you think of the asymmetry of Solvac shareholders compared to the Solvay shareholders in terms of flexibility, choice, and possibility of arbitrage between Solvay and Syensqo after the demerger?
I'll take that one, Amélie. Thank you. The industrial Solvay endeavor continues within Solvac by bringing together Solvay's two historical business units. Solvay's historical shareholders can continue this success story by remaining Solvac shareholders. What Solvac tries to offer at current terms and with the current visibility is an optimized risk-return profile as well as a continuity for all those who want to benefit from both the growth profile of specialty chemicals and the resilience and dividend of the activities of a new Solvay.
We also received a very important question, I believe. As a small investor, how can I make sure that my voice is being heard?
Being a long-term holding whose shareholder base consists of approximately 40,000 private individual investors, including the descendants of the founding families of Solvay, Solvac is very compatible with private individual investors. Furthermore, Solvac takes individual investor feedback very seriously. We have an active dialogue with our shareholders and proximity is created via our free shareholder service that we actively monitor and use. As the long-term reference shareholder of Solvay and Syensqo, Solvac will continue to strive to protect Solvay's core principles and enhance shareholder value for the long term.
Thank you. I have one final question I would like to ask you. As Solvay is emerging, would it make sense to also split up Solvac so that the shareholders at the holding level have more optionality to invest in only one of the two entities? Additionally, could splitting Solvac ensure that sufficient time and resources can be allocated to both of the Solvay entities?
Thank you, Amélie. But the merger of Solvay doesn't change Solvac's raison d'être. Solvac is best positioned to be the reference shareholder for both companies and support their envisaged long-term industrial development. By being a shareholder of Solvay since 1983, Solvac has a rich heritage and expertise when it comes to managing its participation, which it will continue to leverage when contributing to the board of governance of both Solvay and Syensqo.
Thank you, Jean-Marie and Michel, for taking the time to answer all of these questions. If I understand correctly, all remaining questions that we didn't address now during the webinar will be answered via email. Is that correct?
Yes, that is correct. We will take the time to answer all remaining questions via email, as well as any questions which can be addressed to the following email address.
Finally, we would like to thank you very much for attending this webinar, and we wish you a pleasant evening. Thank you.